So finishing up the year, I actually realized that we're a quarter of the way through the century already, and I couldn't believe how it flew by, and also just how much has gone on in that first 25 years that we've gone through, from the tech bubble to 9/11 to the great financial crisis and so on. So I want to take a look back and then talk about where we see things today and as we head into the new year. So pretty incredible growth in 25 years in the global economy. A lot of that led by China's tremendous emergence as a global power, or reemergence as a global power. Drove a lot of it in the early stages. But what's really fascinating to me is what's gone on in the last 5 years. And you look from 2020 forward, and about a third of the growth has come in that 5-year period. And pretty incredible given all the things that we've gone on with wars and the like during that time. Here's just a different look of the NASDAQ. And NASDAQ started the century around 3,700, and had a pretty incredible move in the last 5 years, again, from 8,000 or just under 8,000 to 20,000. And I think this is really a reflection of the changing times that we're going through. And when you think back that, back to the start of the decade, the iPhone didn't exist. Google search didn't really take off until 2007. The app world didn't take off until the couple of years after that. We had Brexit in that period. We had the great financial crisis, all the things that went on. And now we have this new leg up with AI, and it's really changing the world. And I think the numbers, the growth rates we've seen, it's going to be interesting to see where we go from here, because there's been so much money thrown at the world, and we'll touch on that next. Is when you look at this chart, this gives you a sense of what's actually occurred in just an 18-month or 15-month period from February of 2020 to May of 2021. We put 30 trillion, almost $31 trillion of monetary and fiscal stimulus into the system to deal with a global economy that was taking about a 6% hit, or a $6 trillion hit. So we put 35% of GDP to work, and that was just to deal with the pandemic. And then you had the wars that came after, and we've added trillions of dollars on top of this in the US alone in fiscal stimulus. You can see why the economy has moved up and why we've had such a strong run in the face of the many problems that we're looking at. And I think this spending is just going to continue to pick up as the industrial and military issues and the conflicts continue to grow, and the battle for AI continues. So really interesting how this stimulus in the middle of this crisis has actually driven us to new highs. And but where do we go from here is one of the issues, because without that support, we're going to get back to more normal economic cycles. And you can see here, this chart shows you the Fed funds 2-year and 10-year Treasury yields from 2000 forward. And when you look at where we started, we were at about 640 on Fed funds rate. And now we're looking at around 4.5% on the Fed funds. Pretty interesting time. We started with a tech problem. We saw Greenspan onto Bernanke get very accommodative, brought rates down considerably. We've had this period of almost 20 years from 2000 to 2020. We were pretty much in straight decline in rates going down. Then we hit this period where we started to see the rate rise, and we're now back to what I would consider the next normal for interest rates. But I think one of the really interesting things to keep an eye on is what happened in this period from when the Fed cut. As you can see on the far right, their 100 basis points of cuts that they've put through have resulted in yields on the 2-year rising about 60 basis points, and on the 10-year rising about 1%. So I think we're at a point now where the markets are sending a different message to the government about spending and what that means going forward. And is the government going to be able to manipulate the economy the way they have in the past? And I think the answer is it's going to be much tougher, given where we are with debt and deficits around the world. So I think this is a really interesting chart, but it also sends another message to me, which is we had a distortion in the global economy and in the markets for the last 15 years of these abnormally low interest rates. And now we're getting back to where I believe we'll see more normal economic cycles, with governments allowing businesses to go through and industries to go through more normal economic cycles that will lead to more boom and bust, as opposed to what's been a government-supported environment. That's not to say that governments aren't going to continue to spend aggressively. They will, but it'll be not the same support. And I think that means it's got to shift to other areas. So let's look at where we are today and what this means for how we proceed going forward, because we're following 2 very strong years in the stock market, and actually 4 out of the last 5 years have seen 18% or higher market returns, with 1 down year in that 5-year period, which is pretty consistent. We're up about 75% of the time. If you go beyond a 3-year period, the markets are up 75% of the time. They're up about 50% of the days, 53% of the days. So it's really, I think it's time, and long-term it matters. But I think we're going to see some short-term selling pressures continuing. And I think there's four or five reasons for that. I think the first reason is people got too bullish following the election, thinking that Trump was going to get all these tax cuts put through. We were going to have more spending going, and we weren't going to see inflation continue to rise, and we'd see the Fed continuing to cut. So I think the first thing is people were too bullish. The second thing is, with the new administration, you're getting considerable policy uncertainty. We saw that with the continuing resolution process that we went through. I think you'll see other issues. I think another reason for near-term selling is the Fed is not easing as aggressively as people had hoped going into next year, and that's having people rethink maybe there's some of their positioning. And then lastly, we did have some stretch valuations out there, so people were trying to adjust their portfolios, but we've also had to push some of the tech selling into next year because you've had such big gains on low-cost stock. People would have taken them this year if Harris had won. With the Trump coming in, you would have kicked out those returns until next year to stretch it out. I think that's one element that we should expect. I do think we'll continue into more positive returns in U.S. equities for next year, although not the 20% type returns, but more along the lines of more traditional 10 to 12% returns. I think the bond market is going to play a major role, and the bond vigilantes have already started to act. You saw that with the move up in rates since the Fed started announcing their cut. They don't want continued spending without some fiscal discipline around. I think you're seeing that with parts of Congress, but you are seeing it with the bond markets as well. And that will limit the ability to have the free spending that we've had going on. I think you're going to see a fight with Johnson as the House Speaker starting the year off. It's going to make it a little bit more challenging for the Trump policy agenda. And we also got a sense that the mandate he had is not as strong a mandate with the voting members of Congress that will make it more difficult to get some of the policies through. I would add another element to it, which is the Republican Party is not a unified party right now, as we saw in the last couple of weeks. You're seeing it with the immigration debate. I think it's actually a healthy debate that we're now looking at both sides, not just closing the borders, but getting the right flow of immigrants in and getting the people committing crimes out. So I think that's a key element that we'll be focusing on. I think there are several drivers that are going to push the market forward. The $7 trillion in cash that we talked about in money markets will look for a better home as the Fed does bring short rates down somewhat, although not to market expectations. I think the federal government will not spend at the same, will continue to spend at a higher rate, but not as aggressively as they have been. That'll shift more spending onto the state and local governments and also to corporations, and the boomers will be picking up on that spending. I'll talk more about that in a minute. And I think underappreciated is the fiscal discipline. Even if DOGE doesn't create $2 trillion of savings, slowing the spending rate of growth on spending making Congress think twice about putting pork into every kind of regulation, or every time we need to raise the debt ceiling, making it all about putting in special interest and making sure they're served. I think all those things will be mitigated somewhat and make it much harder for politicians to play the game that they've been playing and get back to more disciplined budgeting. I think deregulation is a big opportunity, and Trump doesn't need Congress for that. I think the Biden administration basically added about 3% of GDP in regulatory costs. I think reducing some of those costs goes a long way to helping medium-sized businesses and big businesses. On smaller businesses, it depends on what your debt situation and cash situation is like. And then I think the third thing is you have fiscal discipline, you have deregulation, you have drilling that's going to keep energy costs relatively low. I think those are three things that are not getting enough appreciation from the market as to how they can help offset some of the other concerns that are out there. There are real risks out there, as we list here. Policy mistakes, whether it's geopolitical or economic, are real. You also are seeing rising social concerns around the world. In the US and other Europe and China are all seeing rising social unrest issues that are kind of natural in the kind of uncertain environment we're in, and with all the election turmoil that we've had. I think inflation is going to be more stubborn, getting to the 2% target. That's going to frustrate investors, as they were hoping for rate cuts from the Fed. And if the Fed cut, it would free other nations to be more aggressive in their rate cutting, because if they cut too aggressively and the US doesn't, the dollar strengthens, and that makes things more challenging. So I think inflation concerns is going to limit the ability of central banks to meet market expectations. I think the third area that is of concern is AI spending, disappointing and not getting the return on the investments that people are hoping to see the productivity improvements come through. And then the fourth one is net interest costs crowding out required spending for governments. And I think that is part of what is leading to some of the social unrest. And also it's exacerbating the inequality issues that we've seen. But this just gives you a sense of why there is concern in the bond markets for interest rates, and it's what the net interest costs would be at different interest rate levels, at different yield levels. And you can just see we're looking at about 3.5% right now, gets you to roughly 900 billion of interest cost on their way to 1.2 trillion. And if you got up to 4 or 5%, you could see a real problem. And this is where the crowding out issue starts to come in. And we have big needs for spending around the world and in the US as well. Infrastructure needs a lot of upgrade. The electrification process is going to be ongoing to get the electrification required to meet the AI needs and to move the world forward. Those are all going to be real issues. And if that keeps pushing rates up and we see net interest costs go up, that's going to crowd out the spending that's going to be required with major needs and demands on governments today. But on the more positive side, you have corporations more than willing and able to step up and fill the void. And if you look at this, this is corporate profits from the 25 years that we've seen, but pretty significant moves from around 560 billion up to 3.4 trillion. What I really want to point out is what's happened since 2020. In the last 5 years, we've gone up from basically 1.8 trillion to 3.4 trillion in corporate profits. And you can see the leg up that's occurred the last couple of years since OpenAI took off. And you can see the increase in profitability. But I think you're going to see a matching increase in CapEx that's going to really define who wins and who loses going forward. But I think this is one of the transitions where DOGE kicks in and governments become more efficient in their spending. The private sector picks up and fills the void and starts to spend more to get the productivity improvements they need in place to make the transitions to improve their technology stack and the like. This is where a lot of the driver comes from for the economy going forward. The other element is we have a very bifurcated consumer where you have now we're moving to 175 trillion of consumer net worth. About 80 trillion of that is held by boomers, 65 and over. that are no longer working or slowing down their workloads and increasing their time for spending. And that 80 trillion that they're holding could be passed on or spent over the next several years. And that is going to be one of the other booms that carries the economy forward. We've never had that kind of spending power from an age segment that has that much free time in history. And I think that is going to be a big driver. Now, there are demands on that money. I think 28% of people over 65 may have a child living at home with them who has returned from college and the like. So there are challenges here, but this is a big driver for the system going forward. So we have a very different world than we've lived in before. The last 25 years have been pretty amazing in terms of problems, but we've also seen some of the most amazing innovations in history. And I think that's just the tip of the iceberg. I think Justin Trudeau said a couple of years ago, the rate of change has never been this great and will never be this slow again. And I think that's what AI is going to do. It's going to change the world at a rate of change that's been much greater, that'll lead to increased volatility, but also lead to increased opportunities. And as we started this with a chart of world GDP growth, for all the problems we've had over the last 25 years, and they've been numerous, we've continued to push through them because of the amazing innovation, because of the growth and the technology advances that we have going on. We are an amazing world that continues to grow and learn from our mistakes. We continue to make more of them, and I think we have a lot of conflict going forward, but there are some big opportunities for investors who are very thoughtful about it. And also, I think we need to step back, Mark, and take a little bit longer term view of how we're chasing our investment opportunities. We got a little too short term oriented over the last 25 years. And as you can see here, money is made over time, not instantaneously. And I think they're big opportunities. So with that, I'll stop and wish everyone a happy new year and safe and healthy one.
And you'll stay for questions.
Yep.
Thank you, Stephen, as always.
Thank you.
So questions, comments?
Stephen, what happens if America just says, if you're a US holder of debt, we'll pay you, but otherwise we're wiping it out? What if we default?
Well, I think at that point you lose your reserve currency status, and then all our debts become questionable. So I don't think that's likely or realistic to happen.
Okay.
Stephen, that makes a lot of sense to me, but Trump has done this many times in his career. Default, and he's always come out successfully. So why would he think that he could not default here and come out successfully again?
Yeah, I'm not saying
that's what I was thinking.
Yeah, I'm not saying he couldn't do that, but he doesn't. There's certain things he can do without Congress's input. Deregulation is one of them. Immigration's another, but debt and deficits are not something he can do unilaterally and deal with. So he needs Congress, and he doesn't have that much support, as much support as everyone thought he had a couple months ago. So I think it's very different to do what he did personally versus what the government would do.
But surely the consequences of this notion would plummet the entire world into a depression. And why would it seems counterproductive that the US would default on the debt, because too many other important parties hold a significant amount of US debt and or assets, whatever they may be, that are linked to the US dollar. So it seems to be net counterproductive, and hence I'm just curious to understand what would be the motivation to do that, and what would be the how would things be restructured after that, after what would I would think would be an apocalypse?
Well, Anthony, you bring up a couple interesting points. I think there's one thing that people have also underappreciated, and that is that China has been pretty consistently bringing their holdings down of treasuries from about 1.2 to 1.3 trillion to now down under 800 billion in the last couple of years. Japan's brought theirs down a little bit. So that's 2 trillion out of 6 trillion, I think, is debt held by other governments. So who are we going after, I guess is the issue. China can write off theirs.
I resonate with what you're saying, Stephen, but and I'm aware of that. I was thinking about everything else. So whether it's Bitcoin, gold, silver, petrodollars, and just the flow of the economy, it doesn't just happen overnight that you move from a dollar to a BRICS or whatever the next currency may be. It's a long, slow, painful process, is my point.
Yeah, I agree.
And Trump is just a blip in the big scheme of things. That was my point. And it's not just Trump. Whoever's in office for 4 years, it's just a moment in time.
I'm not sure whose hand was up next. Adam, I think.
No, I'm fine. Go ahead, Bill.
Yeah, sure. Yeah, Stephen, just to back up your point, my data is a little bit stale, but roughly a third of U.S. debt is held by outside the U.S. The rest of it is held, and the next biggest segment is federal accounts. So the federal government holds 28%, more or less, of the debt itself. So yeah, it would be a silly thing. It does sort of raise the question of a jubilee, but I think just outright defaulting it's just not an option. It's just not an option.
Yeah, and I think the total debt outstanding now is over $300 trillion globally.
Yeah.
So our debt as a percent of that's held outside is minor, to Bill's point. So I think that's another key element of it.
To change the subject slightly, David, just what do you think about tax selling right now? I mean, good old fashioned tax selling.
I think it's gotten complicated because of the last couple of years. If you think we're up, I think 80% over the last 5 years in the market, give or take. You had 20% years, or 20+% years, and a down 18 in that period. And I think what you're seeing is tax loss selling right now of things that are down and things that you want to reposition because you have big embedded gains you're pushing off until the first week of the new year. And if Harris won, you would have been selling this year. With Trump winning, you push it off till next year on your low cost basis stuff, and you're taking your losers now. So I think that it's been a little bit different. We didn't expect as much selling. I thought the selling for this year would have been pretty much done, and they were going to see a big move next year. But it's actually picked up, I think, the last couple of weeks. So a little bit unusual approach there.
I agree with that.
I also think that Johnson needs to get nominated as Speaker of the House on the first day they're back, and that could make things a little sloppy right out of the blocks. So we could have a challenging first couple weeks or even month, and then I think we'll get back to a more positive outlook for the equities. Not sure who was up.
Yes, Stephen. My question, because Bill started about it again regarding U.S. default. Did I miss something in the news? In that, how realistic is a U.S. default? Did somebody say something about a default?
Yeah, I'm with you, Adam. This doesn't make sense to me either.
I mean, it just doesn't.
It's actually a reflection of
we're the bankers to the world. We've got the fiat currency. The likelihood that the U.S. government defaults because of Trump and Trump pushes, I don't see it.
No.
Sorry.
Not at all. Not at all.
It's really a reflection of this is a
right.
reflection of Trump's personality and his past. And having worked at Deutsche Bank when he was a fairly healthy client of the bank, well, not healthy, unhealthy climate.
Unhealthy, yeah.
I like that. I can appreciate the question. I just think it's very different for the government to do it versus for him to do it. The difference is actually, I think the joke he used to make is, you know, if it's $1 million, it's my problem. If it's 5 billion, it's theirs. And that's the way he's always approached debt, is whoever has the biggest loser in it is at most risk. I think in this case, it's the U.S. government would be at most risk, and therefore they wouldn't do it. So,
Yeah. Well, I'd like to also, what my last question here, something that Duncan actually put in the chat, which is very interesting, regarding Tether, the stable coin. And Tether is used by Russia and the Chinese to do cross-border trades. You've got trillions of dollars of that growing. And Duncan, if you're on, maybe you could add a little bit to that, talking about the treasuries that Tether allegedly owns, which is supposed to back up the stable coin.
Yeah, I mean, look, they're in the United States, we don't appreciate it because, you know, you put your debit card out or your credit card out, and you pay your bills after you get your bi-weekly pay stub. You know, around the rest of the world, most people have very unreliable currencies, and Tether is aggressively going after the market for workers getting paid in crappy currencies. And you know, they have an incredibly profitable business themselves because they don't actually pay the interest to people on the Tether accounts. They just back the Tether coin with the U.S. Treasury. Yeah. But that's created, what you've essentially done is you have like created a retail market for U.S. Treasuries. Even if China doesn't want to own it, you know, own the U.S. Treasuries, you know, the guy paying his bills in Turkey does. And so I don't know, it'll be interesting to see where this goes. My only point on that was, you know, one way or another, people trust there are buyers for U.S. government securities. And, you know, the U.S. dollar is just trusted more than other currencies. So, I mean, you know, Trump just, he throws crap at the wall all the time. You know, if you believed everything he said over the time, you know, we all know not most of it isn't true. And I'm not making a political statement, that's just his style, right? So he's not going to, the U.S. government's not going to stop paying its debt. The U.S. government's just going to find more buyers of its debt. And, you know, by the way, what's wrong with 5%? I mean, or 4.5%. I mean, I'm sitting there, I you know, 7 trillion of cash, whatever the number is, Stephen.
Yep.
You know what? People should have a much higher permanent allocation to cash or cash equivalents now than they have for the last 15 years, right? I mean, it's just, what's wrong with earning that return over 3% inflation? You know, if you think the market's going to have a run, great. So I don't know. I really don't worry about finding buyers for U.S. government debt. I mean, do we really worry about that? I mean, realistically, at these levels?
I actually think that, Duncan, I think you're spot on. I do think that the idea of Doge, whether you like it or not, I think the idea of slowing the rate of spending in the U.S. and making it much harder for Congress to just play the game they've been playing, which is not to govern, but to just haggle with each other for giveaways. I think those days are coming to an end. It's not going to stop government spending or slow it down. It'll slow it down. It won't stop it. I think that slowing the rate of change in spending is going to be critical to confidence in our treasuries. And so I think some of the steps that are being taken are stuff that does strengthen the view of the treasuries, not weaken it.
Is it contractionary at all? I mean, that's really what I've been wondering. It feels to me like, you know, there's certain things they can't touch, Social Security, Medicare, and all this kind of stuff, these transfer payments. But, you know, guys like Elon Musk and Ramaswamy, I mean, these guys have made a living wringing excess expense out of things. And, you know, I don't know if it's 2 trillion, but even if it's a quarter of that, I would have thought most of that is excess people, you know, and excess consultants and things like that, right? is that contractionary at all? I mean, that could be the surprise to the market, is we actually get a contractionary force out of this that sort of tempers the GDP number and maybe brings that inflation number. That might be the surprise. We built in an inflation, stubborn inflation. Maybe we actually have a contracting force here that comes into play this year.
So Andrew Randak here. Sorry to interrupt. One of the statistics I saw very recently was the highest rate of millionaires per capita in the United States is Washington, D.C. And if anybody wants to know where the money is going, it's going to the ecosystem of about 100,000 businesses that subcontract to the federal government. So if you're going to cut the spending out of the federal government, you're going to be taking money from private businesses. And I know this is, quasi, anti-capitalist statements that I'm making right now, or socialist statements, depending on your point of view. But it's so entwined, the contractor government payment market, that undoing it is a bigger task than either one of those men have ever accomplished.
Yeah, I think there's a big difference between undoing and slowing, and cutting costs and slowing the rate of growth of those costs, and just eliminating some inefficiencies and waste, as opposed to a wholesale wrecking of the government and stripping out the budget that way. So I think we get a little caught up in the headlines a bit, and there's a more moderate view of how you can do things without wrecking everything. Although Trump is a wrecker by definition, the rest of government is not. They're more gradualist. So I think that the idea of slowing the rate of change of spending will have a big impact. I don't think they'll find massive cuts, but I think getting things under control will matter, perception-wise and reality-wise.
I'm going to jump in. Couple of comments, Stephen. The first is, you had mentioned almost in passing about pushing spending down to state and local governments. And I think that's going to happen, but it's going to create interesting issues, because a lot of the spending that we see at the federal level is financed through debt and deficit spending. States and local governments can't do that. So I think we're going to see a wave of either significant cuts in state and local programs, or attempts to increase taxes, or both. So that'll get very interesting very quickly. My other comment is about what's going to happen in January. If Mike Johnson does not get the speakership, if he loses the speakership, and we're facing a potential government shutdown in mid-January, and if there is no speaker, it makes it difficult to impossible to deal with that issue. So we're looking at some very interesting times in the next month or so.
Agreed. I think the Johnson issue will be a really big test for Trump and for his agenda, as to how, because if they get sidetracked on fighting over a Speaker of a House for an extended period, that is going to create more disruption in Trump's mind, and he'll lash out, I think, in ways that could make things very sloppy for a while. So I think that is I think you're onto something there, Michael. If Johnson doesn't get through smoothly, you could see some real bouncing.
And with the very narrow majority that the Republicans will have in the House, it makes it especially difficult.
Yes. And I think that people don't appreciate that enough. And I think they got the first taste of that with the voting for the continuing resolution. I think everyone was a little surprised by that in the administration, that they got such pushback. But
Well, and
I think it's going to be tough.
it's going to come from the right, which is really interesting.
Yes. It's interesting that on one issue you highlighted this one. I think the immigration issue is another one that's going to be fascinating to watch play out, because you finally had some sense of realism put into the discussion, which is we can't be dominant in AI if we don't have the right engineers coming through, and we're not creating enough in the US. And somebody used the example of it's like putting together the Dodgers. You wouldn't do the Dodgers. The Dodgers wouldn't be the Dodgers right now without Ohtani. And if you just had domestic players, you'd be losing some of the world's best talent. And that's the argument that Musk and Ramaswamy are making, and it's the right one. Getting immigration right is going to take people moving off their ideology and being more practical. And I think you're seeing to see that play out.
I thought it might be useful to have an actual economist make a statement. Mark Williamson,
Please.
you're off camera, but you've heard our discussions of late in this one. What are your how do you weigh in on all this? Actually, do you mind also introducing yourself just briefly so everybody has the context?
Sure. I'm a accountant and lawyer by training, international lawyer. I qualified overseas and in the US. I worked with Deloitte for a while, and I run a private equity group that's in primarily in London in infrastructure and properties. I also have a legacy family office in the Pacific Northwest that I'm still managing on behalf of my family. I spend a lot of time in Europe, in Germany, Switzerland, a little bit of time in Paris and London, mostly in London, and part-time in the US. I talk to a lot of people from the Saudi side that worry a little bit, and the Middle East that worry about American investments. And I remind them that we have a lot of assets. So America hasn't done any privatization to the degree that Europe has. So we have untapped resources that I don't think Trump or any of the administration has a appetite to undertake right now, but I always see that as a reserve. I think the appetite right now seems to be in the oil and gas and producing revenue to from that sector to drive down our debt, restructuring our overhead, as Stevens just so eloquently laid out for us. And but I always remind my overseas investor friends that America is still a great place. We have untapped reserves and we haven't gone through rounds of privatization that Europe has. So those are always there and available for us if we're in a situation. So I don't see us defaulting on debt. I think America is still a great place. My play in Europe for U.S. investors is it's really a diversification play. You're not looking at a higher rate of return per se. For those of us that are in the ball game, there's that student housing and there's certain sectors. Stephen alluded upon it last week. Infrastructure, following student housing and things of that nature, there's still some nice sweet spots over a long period of time. So I don't think we need to be worrying about our default. I think we have the reserves. Do we have the appetite to tap them? So these are some areas that I think have helped to alleviate some foreign investors about the future of the American markets. Always the strongest and really always will be. Europe's more of a diversification play, I think, for European investors.
What do you think of Asia then, Mark?
I mostly just raising wealth through Singapore, through friends that are at Tamazac, and I've been invited to China to raise money from their sovereign wealth funds over there, but haven't done much with it. With kind of a negative appetite, if you will, on what they're doing in Africa. So I've been invited by the CAD Fund to manage money for them through some friends and colleagues from university, but really haven't taken them up on that. There's a lot of, if you will, non-politically correct feedback on what their approach is to Africa. So I think it's a really careful area you have to navigate through, I think, in that area. Singapore's a fantastic spot for fundraising.
And we're going to see you in Naples. Can you hear me? Are we going to see you in Naples, Mark?
Sadly, not Naples. Actually, I've got London, New York, Miami, Caymans, and I've just been called in to Dubai all in this month. So I think that's going to make Naples challenging, but definitely Miami. I'd love to be out there playing pickleball with you, Mark.
There you go. Okay.
Next time.
Adam and Michael, new hands up.
Yeah, Adam's up next.
Go ahead, Adam. Are you frozen? Hey, is Adam frozen? I think that's you then, Michael.
Of
Okay.
I'm sorry. What? Didn't hear you.
Comes back.
You were off. I'm going to stop your video. Carry on. Go ahead, Adam.
Yeah, my question, Mark, this is the second time in a week that I've heard about privatization of U.S. government assets. What is there to be privatized? Or what could be privatized?
Yeah, what assets do we have? We certainly have the land. We have minerals and resource rights. So whether we're leasing them, licensing them out, or selling them outright, these are different approaches to raising capital.
Okay, thank you.
Michael, back to you.
So, Mark, you touched on oil and gas, and that's something near and dear to my heart, particularly natural gas. And so a few thoughts on that. Historically, exports represented less than 10% of U.S. production for natural gas. And so the U.S. was somewhat insulated from fluctuations in global markets, unlike oil. And most of the exports actually went to Mexico via pipeline. As we saw the rise of liquefied natural gas, exports represent potentially 25% or just a little bit more of U.S. production. So the U.S. is more exposed to fluctuations in international markets. And if we see major growth in terminals, that exposure increases significantly. And while on a personal financial level, I was very pleased when natural gas was up over $9, that's not very good for the country. So that's number one. Number two, speaking with folks I know in the oil patch, and I'm centered in the Utica, I don't care how many times people say drill, baby, drill, or, we're going to produce a whole bunch more. My sense from speaking with people who are the ones actually doing it and putting money on the line is that they're going to be exercising restraint because they really don't benefit from significantly lower prices. They have to recoup the investments that they're making. And I'll tell you right now, rates on drilling rigs are up. And, everything's expensive in the oil patch. And so I just don't think we're going to see huge increases in production. I think government leases, will happen at a significant discount to private leases from private landowners. And that's one of the things that I've seen in the past is, for example, on the properties that I own that are in the patch, I'm getting 20% on the gross with no deductions. Most of the government leases, the royalties are more like an eighth on the net. And the producers get to play games with the expenses that go against creating that net. So I'm skeptical about the whole drill baby drill thing, and the prices are going to come down significantly.
Skeptical that prices will come down.
Significantly. I mean, I think we'll see typical fluctuations. And so, for example, and Stephen, you had mentioned last week about higher natural gas prices.
Yep. But
this time of the year, we see higher natural gas prices, and the eastern half of the U.S. is going to be hit with a cold snap. So, is this a seasonal increase or is it a secular increase, right?
Or is it both?
Or is it both?
I think it's more likely that it's both. I think the other thing, Michael, I don't think oil prices have a lot of downside in them, but I also think that the cost of production is dropping for the producers considerably through technology. So the energy companies can make more money. The consumer benefits by not having oil prices go up much because we're producing at a pretty healthy rate globally. So does it matter if the drilling drives prices even much lower, or if they just keep them here? It creates a pretty economy at these levels.
To your point, yes, certain costs for drilling have gone down. So laterals, the horizontal drilling legs are much longer these days compared to even a few years ago. And the spacing on those laterals is increased, which makes it less costly for them to develop a unit.
And the big energy guys, their cost of production has come down considerably, and may still with AI and their ability to use tech.
One thing to look at is they've been doing acquisitions at more favorable pricing. And so that's a big aspect of that.
Bruce?
Yeah, we were going to talk about immigration, but we kind of skipped over it briefly. I don't know if you want to go back to that topic. I think it's a hot one right now.
Always a favorite.
Okay. So as I think the only Canadian on the call, I can tell you that we've been very aggressive in immigration, and we've been frankly picking up some of your rejects. People that couldn't get into the States come to Canada with the eventual hope of moving into the States. But for half a decade, I ran the Economic Development Agency for the nation's capital. And I found that the degree of entrepreneurship amongst immigrants was not surprisingly very high and very valuable. And if you look at our colleges and universities, you walk around the engineering campus and white people are an exception. So we've really got on that bandwagon, in fact, too quickly, and we had to peel back some for immigration here recently. But we're expecting a bit of a wave from our southern border, which of course is you. If Trump cuts down on immigration and starts some of the deportations he's talking about, then we're expecting to have a bit of a lineup at our border. I don't know how that's playing in the States. Is that still a topic, or?
Yeah, it is still a topic. Although in the U.S., it was so politicized in this election, the lack of control of the border, that people lost sight of what are they really arguing about. And I think that is a major issue for the U.S. We need immigrants here. The world needs immigrants because almost every developed nation is in a structural deficit in terms of fertility and in terms of a demographic cliff that's coming. We have the benefit in the U.S. of having people wanting to come here and having the ability to pick who we allow in. And I think Canada has been a tremendous model for how to manage immigration the right way. by setting up quotas and getting the skills in to fill the needs that you have. We just lost control of the border. And I think that the debate right now may take us back to the proper immigration policy of controlling the borders and bringing in the people that you need to bring in, as well as allowing political asylum to deal with the problem. So I think we may be moving to a real debate on it, not the ideological one. And I think that's going to be very important for the US to move forward. It's also important for Canada. The housing issue is really the fundamental issue for immigration right now in the US and Canada. So how do we solve that issue? I think is really what's going to be forefront. But I think we're going to start to have the right debate on immigration now, as opposed to the one we've had for the last 20 years, which is, are immigrants bad or good? I think they're both. And you have to figure out the right way to do it. And so I think there's a real opportunity. And I think the debate we're having in the US right now over the H-1B visas is core to that discussion. And how do we get the right skills for the right roles? And it's not just high tech. You know, my mother's 95 and has full-time care. And we could not do that without immigrants coming in from the Philippines and other areas to fill that role in the US. So I think it's all kinds of jobs that are going to be required to be filled. And we need to get people from the outside to do it. And I think that's going to be a competitive advantage if you can attract the talent from the rest of the world. Not a problem as people are perceiving it. So Bruce, I think you're onto the right one. And I think the discussion now is the right one that we're starting to have in the US. As opposed to is it good or bad, it's how to do it right.
Yeah. Yeah, housing became our issue because we were bringing in so many immigrants. We were bringing in more immigrants, like twice as many immigrants as we could build homes, and homes were already in short supply. So we're getting a lot of pushback from Canadians, existing Canadians, saying, "Hey, you know, great to have immigration, but it's making house pricing unaffordable for the people who are already here." So we had to push back on that. You've got a much bigger economy and less of a concern around that, I think. But yeah. Yeah, good luck with that debate. It's going to be a tricky one. Meanwhile, we're expecting, like I said, on our southern border, to have a lot of people who are in deportation peril in the United States flooding into Canada. We had that in recent memory in the Vietnam War, and we're sort of anticipating another version of that now. So,
yes, the people I expect you won't say are the people who said they would leave if Trump got elected.
yeah,
but everyone else will see.
Yeah, that happened last time.
The Vietnam War.
When Trump got elected the first time, we had a Canadian immigration website that crashed the day after the election with the volume. But the reality didn't turn out to be that. People made the threats, but they stayed behind anyway. So
yes, we know
it's a big move.
Andrew.
Hey there. Shout out for the political scientists. I know economists are held in higher regard by Mark Saynor.
No, we're liberal arts lovers here. Keep going.
I just put in the chat from the last issue of Foreign Affairs a sobering article called "The Age of Depopulation." I don't remember if I've shared it among this group or not. But one thing that I think from an investment standpoint, demographics is related to immigration, is related to AI, which is really automation. And automation is the convergence of all of these things at the same time. And for those who haven't read it, I highly recommend it because it'll change your view of the next few years coming up.
Yeah, depopulation is going to be a big phrase going forward. The fertility rates are getting absolutely eviscerated right now. And the programs that are being put in place. Russia turned the, pregnant as a teenager thing into from a negative into a positive that they're encouraging. They took it at, pregnant at 16 to moms at 16 to make it so that they encourage people to start having babies earlier and more frequently. So you are seeing this as a real issue for governments that they are waking up too late to a problem.
More whoopee. That's what we need. More whoopee. Do your part for society.
Oh my God.
I just came back from Japan where they've been facing that in a big way. And one of the things that really struck me was in North America, a lot of people, their major part of their net worth is their residence. And in Japan, your residence is worthless. There's about 5 million empty houses in Japan outside of Tokyo, and nobody counts on the value of their home as an asset for retirement. So when I asked them how they planned on fixing that problem, they just shrugged their shoulders and said, we have no idea. So they're on a bullet train heading for a demographic brick wall, and they know it, but they're not doing anything about it. So it'll be interesting to see what's going to happen. Their population is about 120 million. They estimate in 5 years it'll be 110 million, which means 5 million more empty homes and less jobs. So that's going to be something to watch. And China's not far behind them. So
they've been losing about 800,000 people a year, and it's accelerating now. It's really frightening statistics for them and for China and North Korea and not North Korea and the Koreas, which are arguably among the world's largest nursing homes right now.
It's not just losing population, aging population.
Yeah.
And they're not bringing in, and the birth rates are down. So you're getting the worst of both worlds.
And they have no immigration opportunity because nobody wants to go there.
Yep. That's the thing that really kind of rankles me about the U.S. immigration policy and the debate around it, is that we actually have a country that, if we get it right, we can absolutely continue to grow at a higher rate than we've been growing in the past. And if you look at the leaders of most of the tech companies in the U.S. today, they're immigrants. If you look at the mayors of major cities and politicians, they're immigrants, not just here, but in the UK and elsewhere. So we have to figure out how to do this right to get the best. And it is a topic I actually have for January, is one of the topics I want to look into. There's submitted a report on how to get immigration right that I want to take a look at, see if that's, Mark, that might be the 250.
Yeah. For the 21st?
We'll have to see. Yeah. But it's an important topic, and it's going to increase in importance. And we're just scratching the surface of it right now, I believe.
Yep.
And at the risk of sounding like a social experiment, when we did some of the analysis in our region, we found that 75% of the business owners were not born in the city in which they started the business. And we conclude that the reason is psychologically the same mindset that says I can go somewhere where I don't know anyone and be successful is the same mindset that says I can start a business that nobody started before and be successul. So that brain processing that you find naturally in immigration, because they've already expressed their desire to take that risk and come to your country. I mean, I used to say if the second thing we found was they were making money before they were 12 years old. So I used to tell my staff, if you find somebody who was not born in our city and it was making money before they were 12 years old, double down on that person and give them all the support they need to turn their business into a success, because they've got the underlying concepts ready to go. Anyway, I digress.
It's interesting hearing that from a Canadian.
Yeah, we're not as a people, we're not known to be as innovative. So our fix is to bring people into the country who are. So we have a lot of Canadians working for immigrants. But hey, at the end of the day, it works.
Yeah, Google,
Fair enough.
Microsoft, and IBM, for name a couple in the U.S. that have some people working for immigrants as well.
Absolutely. In fact,
Speaking of IBM, different subject, they announced a new way to create their super quantum computer by relinking a series of computers. Did anyone see that?
Yeah.
Is there anything to that? But it's only three times faster, but I guess that's still good.
We've seen stuff like that before, and think about when I look at data centers, go back to the 90s or even the 80s, most of the servers were 4Us or larger. And then it dropped to 2Us, and then it dropped to 1Us, and then it dropped to blades, right? And so, yeah, I think it makes sense as they figure out how to link them. I also think that despite people's concerns about the electrical usage for AI, it'll get more efficient. That's just the nature of things.
Fair enough.
But I had my hand up for something else.
Yeah, okay, go for it, Michael.
Stephen, one of the things that you didn't mention and nobody else has raised today is the potential for a farm crisis. Right now, for our two largest crops, corn and soybeans, prices are about $1 for each of those, $1 or more below the cost of production. And so it'll get interesting going forward because where are these crops going to get sold?
Yeah, farming's beyond my scope of focus, to be honest with you, Michael. I'd have to get my partner Sean to come in for that one. He's got the Ohio farming family in his group, but I'm not up on the farming, and I know it's a problem with the subsidies. I just don't know how we solve our problem there.
Hello, everyone. I just read something on the potential farming crisis if this mass deportation happens, and they were saying that ag tech is supposed to be supported by the government. They could either subsidize, give tax incentives, but they're looking for ways to, I guess, replace the human capital or the human work with robots. So they were talking about AI-driven tractors or plowers and things like that. So I don't know. I just told my partner the other day, I think it's something we should look into, at least verticals, because some of the larger companies are gonna, it's gonna take a lot to develop these technologies. But if you can find ways to support that development or add-ons into those developments, I think that could be a good way in the private markets.
Well, Cheyenne, if you're interested in that, and by the way, for the folks who don't know me, I also own a farm. Other than for the IRS, I don't claim to be a farmer because I don't have to make my living from it. But anyway, Cheyenne, if you're interested in precision agriculture, which is what that space is called, London, Ohio in September, Farm Science Review is put on by the Ohio State Extension. And they get, I don't know, about 150,000 attendees from all over the world. And as my wife has put it, just the vendor area is 100+ acres of agricultural corn. So if that's a space you're interested in and you actually want to meet with people and see what's going on, that's the place to be.
Thank you so much, Mike. We will look into it.
Mark, I think Michael brings up an interesting point on robotics and the applications of them. It may be worth having a session on that for different industries. Bring it in. I was thinking of Matthew's business for one, but the manufacturing area, the farming area, it's going to hit virtually every sector.
So there's another Denison alum who's with a company called Dram. Actually, it's his wife's parents. It's basically it's the largest supplier into everything in greenhouses, and it's actually he introduced me to another company in Ohio that distributes very specifically for robotics in greenhouses. So we could tap our networks and do that. Can I tap you, Michael, to help? Or should we do an event on one of those 100 acres of in London, Ohio, in September, or do a lead up event to it?
That would be interesting. I go there maybe every other year. So the first problem is folks aren't going to find hotel space anywhere near London. It's about an hour west of Columbus. And secondly, it's a real pain unless you get there incredibly early. It's a real pain. Just getting into the parking. They have the,
Well, so we'll get a bus and we're not going to stay there overnight.
okay, what I would do is I would suggest if you're interested in that, reaching out to the folks that run Farm Science Review.
All right. So maybe you and I can talk offline, but is this also a competition like the auto industry between Detroit and the Midwest with Silicon Valley?
I don't know if I'd put it that way. There's lots of startups that are trying to grow their capabilities in the space. The large players, John Deere and whatnot, are incorporating technology into their equipment. So, you can see these huge combines and tractors and whatnot, and they'll have a whole array of antennas for different purposes on these vehicles. But there's also tension between farmers and the ag associations that represent them and the vendors, because who owns the data, right? Is a huge issue. And you've heard the expression, data is the new oil. So that kind of plays into it.
I need to ask you later about metadata versus data.
Well, it's both. So, and not to pat myself on the back, but back in 2011, when I first started getting interested, I was buying a new tractor because I needed to use up some money from a signing bonus on a lease, and the tractor was deductible. So I was there, and so I was walking around looking at stuff, and just before that, I had been at DEF CON, and a friend of mine had shown off how he had hacked a 3-point corn planter to plant corn seeds much deeper than they normally would, but show the operator that they were being planted at a normal depth. And that got me really intrigued because I had never made the connection between my day job in cybersecurity and owning a farm. And so I'd started looking into it. And I actually figured out that following year how to take out about 10% of U.S. agricultural production because of some bugs in software. And so, it's an issue, right? We just saw Department of Treasury saying that they had computers hacked by a Chinese hacking group. And so the more that you do these things, right, automate and put stuff in the cloud controlling it, the more risks that you're taking. And I've actually spent a lot of time thinking about resilience and graceful degradation in systems, because we build great systems that are incredibly efficient, but when they break hard, right? And they just fail.
Yep.
And
Fair
I
enough.
don't like that sort of thing.
Well, this is our last briefing before 2025. Any last comments or Jack's online here.
Hey, Mark, there may be a strategic and interesting idea here. 361 is going to London, England, in September or so, and we just heard a discussion about London, Ohio, and the two Londons are dramatically and remarkably dissimilar.
True.
Why don't we go to both? And since London, Ohio is halfway between Columbus and Cincinnati, we could create the first ever London entrepreneurial enclave, something in a cornfield, and have entrepreneurs from both markets go to London, converge on the place, and it could potentially become world famous.
We could all go in Scott's bus.
Yes, we'll
Well,
take my
the
bus
bus-
and wear overalls.
No, hey, listen, the bus,
So-
no, hey, listen, I didn't want to articulate all the points on the list, but the bus is absolutely critical. It's a must, and without it, forget the London to London, the bridge from London to London.
I got some
So-
work to do on that thing if that's the case.
Oh,
so.
we could take the bus to London, Ontario,
True.
which has its own attributes.
Tomato capital of the world up there.
No, that's
You-
Reynoldsburg. That's Reynoldsburg. You're
Wait a minute,
forgetting-
this idea of a triple London is outstanding. London, Ontario is an interesting place.
It is.
Uh,
It reminds me
and-
of Chautauqua, which we also need to go.
Indeed.
I just signed up for July 12th, Chautauqua. So go online, take a look at the program for that week.
Well,
Maybe
for all-
we have
for all
a
the
gathering
above.
there.
For all the above, Jack, you and I need to sync up, and you're gonna be a co-leader. Get ready.
London, Ontario,
2020.
London, Ontario is my hometown, so I'll help you out.
Okay, triple
Oh,
London.
there you go. But
London
did you hear that?
Cube.
Did you hear that, Bruce? That's Bruce's hometown, Jack.
That's right.
That's
That-
serendipity.
Well, that actually confirms it. Triple London is on for
That's it.
2025, which is
London Cube.
that's only a year from now, 2025.
That sounds like London cubed.
It is London Cube.
Well, you know what?
It's like a building that should be in London. Is the
Guys,
London Cube?
I don't have time to do that this year, but we'll do it next year.
Well, we have time, so we'll do it.
Yeah,
Can
we
I
don't need
suggest
to.
the quadruple London and go to London, Texas, outside of
Oh.
Lubbock? Because
Oh,
I'm
my
just
stars.
No,
saying,
no, my point is
This-
next year is like around the corner, Jack. So we'll make it happen.
This idea is big.
Well,
Oh, well,
Chris,
pardon me,
Lubbock is
it's becoming bigger and bigger.
Lubbock's a great spot for regenerative agriculture. I was going to ask you, Michael, is this mostly a tech event, or is it also strategies in circular and regenerative ag?
So it's basically where farmers and folks in the industry go to see new seeds, new technology, blah, blah, blah. There are a couple pavilions where they have sessions on various topics.
Mhm.
And then they have actual showing off stuff in the fields. So they have demonstration fields and whatnot. I'm just about to throw into the chat the link to their website. Here,
Great.
hang on a second.
Is Central State a big sponsor of this? Because it seems kind of in their backyard.
Ohio State.
Oh, just Ohio State? Yeah, because there's only 2 land grants for those of you who don't know. Central State's the other. It's not too far outside Dayton. And one of my colleagues there is a great researcher in industrial hemp. That's where I come in. So,
Can your bus travel there too?
oh yeah, it can go anywhere, Jack. Shy of the ocean. Yes. We'll have to skip London, England on that one.
But I'll say if folks are planning on going, bring your walking shoes.
Yeah. No,
I'm actually thinking about my wife and I bought a new UTV for getting around the farm this year. I'm thinking about trailering it down. A lot of people either rent or bring golf carts or UTVs for getting around.
very cool.
We'll figure it out.